That's absolutely true. Evergrande's operations are wide and vast and potentially unknown in their full extent. But the key thing here about whether there's contagion risk and, as you say, whether everybody just runs for the hills, I think does ultimately hinge on where the Chinese state sides on this. People have an understandable concern that the Chinese government have it in for the property developing sector in China. You know, these are the property speculators that are sucking in the resources away from the rest of the economy, away from those sort of high tech industries it wants to develop. It's sort of associated with the signs of visible wealth inequality that the Communist Party is trying to tackle. So, and it's also, of course, given the higher leverage over the years that it's managed to accumulate, it's sort of in the eyes of policymakers as being a risk to financial stability. So in a sense, the state is hostile to it, and maybe that's why people are concerned that the state backstop is being brought into question. But I think that ultimately, both from the experience they have, they've got the benefit of hindsight of what happened with Lehman and the fallout from that. They have got a greater means by which to control contagion and spillover risks. I mean, it's one advantage of being a communist state. That you have extensive reach over your financial system and a massive ability to be able to control these things. And I'd say a third point is that they've managed to demonstrate that the state backstop, ultimately, when it comes to it, is there. We've seen that with Baoshang in 2019. We saw it with Huarong most recently. I think that we're going to see an active response and that they're not going to do too little too late.
Debt across the world has gone up during the pandemic. There you go. That's the most disingenuous thing I can say. But emerging market debt has gone up most aggressively. Currently, somewhere in the region of $92 trillion worth of total emerging debt. That is $15 trillion more than at the start of the financial crisis. Is it possible that this is something that will have huge ramifications across the whole of EM, if indeed we do see wider spread issues?
I mean, certainly EMs, compared to like the Lehman situation, EMs are more vulnerable than DMs this time around. But I'd say that one thing about which are the EMs that are most exposed to China. I mean, we're talking about parts of emerging Asia. It's Asian neighbours that are deeply involved in its manufacturing supply chains. And those countries were some of the ones with the strongest balance sheets coming into this crisis and have been able to offer significant support. Public debt has gone off an awful lot, but that's because their balance sheets were in a strong position to begin with, in contrast to many of the African countries and Latin American countries. And the second group of EMs that are particularly vulnerable are the commodity producers, the likes of Chile and South Africa and Saudi Arabia. And also, of course, you can add Australia to that list as well.